And I'm joined live from Singapore by Timothy Condon, Chief Economist and Head of Research at ING Financial Markets. Timothy, good morning. Thank you for joining us.
Good morning.
Following Hu Jintao's visit to Washington, is China any closer to revaluing its currency?
Well, I think they are. That Friday report in the New York Times moved markets. I think it was authoritative and suggests that something is coming sooner rather than later. I would also highlight Singapore's move this morning, a much more aggressive move than had been expected, and possibly trying to preempt a move by a revaluation of the renminbi by Beijing. So I think there has been some agreement reached between the two sides on a move by China, and it's now a question of timing.
And does the Singapore currency revaluation, Timothy, does that preempt not just a possible Chinese revaluation, but other countries following suit in the region?
Right. Well, preemption has a half-life. If the revaluation of the renminbi occurs today, Singapore will have preempted. If it's delayed for 3 months, it won't have been preempted. So a lot depends now on the timing, and I'm suggesting that the move today by Singapore suggests that they have some knowledge that the move is coming in the very near future.
But who will follow suit after China, after Singapore? South Korea, Malaysia, Taiwan? Are they all going to let their currencies appreciate?
I think they will. I think we can look at what happened in 2005 as some providing a guide to thinking about what will happen with the next revaluation. And at that time, pretty much every Asian currency, including the yen, moved by something close to the 2% that China revalued against the U.S. dollar. So yes, I think it's reasonable to expect that every Asian currency will appreciate against the dollar.
One Chinese economic report, Timothy, that stands out today is the latest property price report, rising, record pace in March. I mean, does the government need to do more to stem property price gains?
On the face of it, yes. This was a record increase. You had a 65% jump in property prices in Hainan Island, where that Bao Forum had just taken place. Clearly, the market is, in parts of the market, overheating, and the authorities have taken measures, and more can be expected. I think they prefer to take more fiscal-oriented measures, tax increases, limits on how much people can borrow, limits on second mortgages, those kinds of things, some of which were peeled back during the 2009 when the economy was hard hit by the global collapse in demand. At this point, they're going to be putting those measures back on in order to try to cool off the property sector. I think that's why the Hang Seng market in China A shares are down today.
Okay, and quick comment ahead of tomorrow's GDP report out of China. What's it going to tell us about the strength of the economy?
China's booming. The economy is simply booming. The authorities are really trying at this point to scale back some of the stimulus in order to prevent it from creating management problems in the property market, in inflation, elsewhere. So the message is China's economy is probably going to grow somewhere on the order of 11% in 2010.
Okay. Timothy, thanks for joining us today. Timothy Condon, their Chief Economist, Head of Research at ING Financial Markets in Asia.